Hello, YouTubers, friends, compatriots, bootlicker, shills, debt slaves, service peasants, vassals, minions, meat sacks. I'm a useful idiot. Welcome. And let's go global today and look at this interesting phenomenon. Over the last year, a lot of foreigners have been dumping both U.S. stocks and U.S. treasuries. And so normally, of course, the foreigners dumping huge amounts of U.S. debt would be a big story, but it's not really a big story right now, which is, once again, an interesting story in itself. So let's look at the numbers first. In 2015, China sold $292 billion in U.S. treasuries, the first ever annual net sell down. And nothing to get excited about. They still have $1.4 trillion in U.S. treasuries, but nonetheless, quite a bit of unloading. And then who's buying them up? And then between 2008 and 2015, Chinese investors bought $117 billion in U.S. corporate stocks. And oddly enough, in the last 3 quarters of 2015, Chinese investors sold $116 billion of U.S. stocks, which would leave them with only $1 billion left. A pretty shocking reduction of their U.S. debt. And a lot of it's balanced out, as we know, because Chinese are buying real estate and entire companies all over the globe now, and that's where a lot of that money's going, something a little safer. But the Chinese aren't the only ones doing it. And Canadian investors dumped $80 billion in U.S. corporate stocks over the last year. They have only $102 billion left, so they sold half their holdings. In the Middle East, unloaded $39 billion in U.S. corporate stocks in 2015, $20 billion in 2014, $22 billion in 2013. And so they've sold off roughly about 70 or 80 billion dollars in U.S. corporate stocks. They have 33 billion left, so they've sold off most of their holdings. So, and then we have Europe sold 22 billion dollars off in U.S. corporate stocks, but once again, like China, they still have 556 billion left. But needless to say, huge chunks of foreign holdings of U.S. debt being dumped on the market this last year, totaling $171 billion in U.S. equities sold off. So why is this not a big deal? Why is this not causing more ripples in the market? Why is this not getting attention? Well, the reason why, because of that story that I've been talking about for the last couple of years, these buybacks. And this is yet another way that buybacks end up distorting the market. So, for example, as I've discussed before, they use buybacks to keep inflate the stock prices. They buy at the top too. They don't buy at the low. It keeps driving up the stock prices, and of course fattens the bonus programs for the executive officers. But a lot of times this is done at the expense of firing thousands of employees and not putting any money into expansion or jobs or research and development. And all a vast distortion of the market, having 90% of all corporate stocks bought by the companies themselves. But what gets interesting here is, of course, we have 171 billion in sell-offs by foreign investors, and the assumption is that it will just be swallowed up by more U.S. corporate buybacks. So this huge move in the market is not even going to be noticed because it will be absorbed so quickly. In fact, Goldman Sachs estimates that U.S. corporate buybacks will total $450 billion in 2016. Again, kind of repeating these record numbers that we've had last few years: $561 billion in buybacks in 2015, $710 billion in buybacks in 2007. So even before the last crash, we've had these corporations buying back their stock and artificially driving up these prices. So that's where this is going to go. Goldman Sachs also suggests that another $50 billion in U.S. equities could be sold off in 2016, but I would suggest that the number is going to be much higher than that. And one of the other aspects of this that shows you just exactly what buybacks have to do with the market and artificially driving up equities prices and keeping the market growing is between 2009 and 2015, there was a 255% increase in buybacks and in the same time the S&P 500 gained 200%. So it looks like a relatively direct correlation that the percentage of increase in buybacks is also the percentage, or roughly the same percentage, that the S&P 500 gained. So good bang for your buck. So there we have it. Foreigners selling U.S. debt like crazy, but U.S. corporations just buying it up before anybody even know what happened. I'm a useful idiot. Don't you be one too.